Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Amal Akila binti Maisa from KBA 2495A. My metric ID is 2019554729. Today, I would like to present about the fintech initiative undertook in Islamic financial system. This video presentation is dedicated to my lecturer Sir Muhammad Shafiz bin Saharan. Now, let's begin the presentation. What is fintech? Fintech is the application of technology to financial services offerings in order to improve their usability and delivery to customers. It operates primarily by decoupling such organizations' offerings and generating new markets for them. Startups in the banking business disrupt incumbents by increasing financial inclusion and reducing operating costs through technology. The first reason why bank embarks into fintech is technology. The fintech industry is renewing the branding of the legacy services it is trying to upend with personnel from non-traditional banking backgrounds contributing an unbiased perspective. Consumers find basic tasks like budgeting more appealing because to modern marketing methods like gamification. Second, customers. Customers are demanding more from their banking services in the wake of the 2008 financial crisis and subsequent scandals. Consumers can now investigate their suppliers more closely thanks to technology, and upstarts are using it to offer cleaner and more productive customer service free of the constraints of traditional systems. Effect of fintech in Malaysia. The impact of fintech on Malaysia is seen in CIMB and Maybank through their profitability. In terms of profitability, the bank appears to be doing well. Until 2017, all of the profitability ratios employed continued to rise at a modest rate. Then, in 2018, the gross profit margin jumped from 17.42% to 19.04%. Due to this COVID-19 outbreak, everyone is required to maintain social distancing and reduce the use of cash when making payments. Fintech helps people to make payment whether it's online or face-to-face shopping, and it also helps people from spread the virus of COVID-19. Furthermore, fintech helps companies in Malaysia such as banks to offer a wide range of cutting-edge products and services. There is opportunity for new financial technology enterprises which can be realized through a broad range of financial services and client respect. Then, ATM cards with smart chips have made a significant contribution to decreasing financial losses due to human mistakes. It has EMV, EuroPay, MasterCard, and Visa technology embedded right into the chip. This system uses a one-time password for each transaction. This improves security because the code is only effective for one transaction. Thus, it will be meaningless if it is stolen. Fintech initiative taken by International Islamic Financial Institution. Phase 1. Fintech 1.0. Telecommunication infrastructure such as installation of transatlantic transmission cables have been established throughout every country. Phase 1 was crucial for the formation of correspondent banking and the expansion of financial institution global interconnection. Phase 2, Fintech 2.0. The traditional financial industry has grown to maturity as banks got more computerized and constructed vast IT infrastructure to support their operations. ATMs and other revolutionary financial products and services were developed. The popularity of central clearing houses, stock exchanges, and international correspondent banking rose, and regulatory restrictions were formed. Phase 3 Fintech 3.0. It is currently ongoing. The services of both new technology-enabled financial service enterprises and established banking institutions. Conventional financial service organizations are not too responsible, even if emerging fintech enterprises are the incubators for new financial innovations. Now, I will explain to you about fintech initiative taken by Islamic financial institution in Malaysia. Number 1. Payment and wallets. Payment and wallets are the two most popular services supplied by fintech firms and startups in Malaysia. This demonstrates that these two services are currently leading fintech services for making payments simple for users. All fintech services are designed to make it easier for bank customers to conduct various financial transactions using the internet and online facilities. Number 2. An Islamic credit card, also called a credit card in Malaysia. It offers a usable option for Muslims to have the enjoyment of a credit card while keeping true to their faith. For non-Muslims who love to use an Islamic credit card will give them an option aside from the conventional credit card. Number 1. Investment management of fintech challenge. The ability to correctly estimate the value of initiative will be critical in an increasingly competitive business climate. If financial institutions do not have a solid portfolio management of fintech projects, they can rapidly become drawn in the plethora of fintech technology. It's challenging to decide which fintech ventures to pursue. Number 2. Customer management. Client management is critical in the face of fierce competition for customer acquisition and retention. For various requirements, there are many customers that use some services but from different fintech firms. As example, a customer can use Venmo to pay for his friend's payment, and at the same time, he can use PayPal to pay for his business. Future of fintech. Number 1. Newer partnerships. Collaborative efforts to ensure a healthy competitive landscape while stressing innovation will increase in 2001 and beyond. As new firms enter the landscape through strong alliance, the fintech sector will grow. Banks, insurance institutions, and asset management firms are all interested in forming partnerships with fintech firms to make digitization easier and faster for them. Number 2. RegTech and WealthTech. Fintech, which represent for financial technology, will see the emergence of RegTech, which stands for regulatory technology, and WealthTech, which stands for wealth management technology. It necessitates that collaboration of legislators, regulators, financial institutions, and technological firms in order to encourage innovation. These three industry players are expected to collaborate as three pillars to bring about progressive transformation in the sector. Number 3. Embedded finance will find many takers. As example, Amazon and Uber, which are both household names. These are industry leaders in their primary areas of business, and it's worth keeping an eye on how they have employed embedded finance to provide great experience for their customers. Companies today provide embedded services ranging from payment to loans, insurance to mortgage, as they can read their client's mind and deliver them exactly what they require. Last but not least, cryptocurrency acceptance. The global acceptance of cryptocurrencies is another big trend that is predicted to gain traction this year. The European Bank, for example, has moved a step closer to establishing a digital euro. Public opinion on the subject is being planned, and we will soon discover how amenable Europe is to embracing cryptocurrency. Generally, the rise of fintech firms poses a challenge to retail banks as fintech offers greater options in the comfort of our own homes than banks. As a result, people have abandoned the conventional financial structure in favor of innovation, which makes things much easier. As conclusion, fintech is a financial technology that has been used through worldwide. Fintech provides convenience and simplifies the public with its services. From my opinion, I hope there will be more services and products from fintech in the future. Last but not least, thank you for lending me your eyes and ears. That's all from me. Assalamualaikum.